As we look at the markets, it's down about 32 odd points, so it's been volatile, but it's recovered 7751. And when we spoke to Anil Mangnani, he said that 7,700 level is important. We break that, and he would not rule out going back to 7,550. Mayuresh Joshi from Angel Broking is now joining us. Mayuresh, what do you do in such a market? Every time we are seeing very, very volatile moves. Is it the best to stay away and wait for the markets to calm down?
Yes, to a certain bit, yes, I think you can stay on the sidelines, Pankaj. But clearly, I think you have to have a very stock-specific approach, because whatever is happening out of China, the kind of news flow that is emanating emerging market currencies, I think that will have a ripple effect on how the Indian currency will also move. Though I think we're very, very stable in terms of forex reserves of close to $350 billion. But even internally, I think we're not seeing any respite happening on either corporate earnings or the capex cycle reviving. Add to that, I think what probably happens with the budget session and the reform processes will be a big overhang for the markets. So clearly, I think the markets to stay in range, and again, stock-specific action is what is warranted. So clearly, I think the markets will remain extremely volatile over the next few months, but one really needs to have a stock-specific action or review on the markets.
Right. Do you think at the same time, all the bad news is coming together? So China is falling, commodities, continue to see a new low coming in, earnings visibility is particularly not that great. You think that all of that means that probably incremental buying would at least not come in? Mayuresh, do you think incremental buying will need some positive factors to come in? Because now everything is looking slightly on the negative side, global or the local earnings. Okay, I think we have a technical issue with this link. We'll just get that sorted. But meanwhile, Nifty is now back 35 points down. It's been volatile, but it's been on the lower side. It's not looking that nice for the markets. We are seeing extra selling pressure coming in every time the markets are going up. However, the mid-cap index has stabilized. That's a space which has not seen correction, or rather much correction coming in. Top losers of the Nifty pack, Vedanta is now down 3.7. ITC has lost out, and I think that is putting some pressure on the market. ICICI Bank is down 2.5%. Hindalco is down 2.5%. Tata Motors is down 2%. Tata Steel is down closer to 2%, 268.6. ONGC, Lupin, Maruti are some of the other losers, down anywhere between about 1.7 to about 1.6 odd percent. As far as some of the mid-cap names are concerned, let's look at the losers and the gainers then. So if I look at the losers first, PTC India is down 4%. India Cement, which had been doing well, is down 3.5%. Suzlon is down 3.5 odd percent. DLF is down 3%, closer to 114.7. Glenmark is down about 2.9%. I think in the morning, Glenmark was as high as 935, so it's lost out about 3 to 4% from the day's highest point. ADAG pack, which till now was not correcting, has seen some correction. So a Reliance Infrastructure is down about 3%. A Reliance Capital is down about 2.5 odd percent. Motherson Sumi is down 2.7, and probably the list just goes on. It's not looking that nice. Tata Motors, at the one at the bottom of your screen, it's down about 2.5 to about 3 odd percent. Mayuresh is back with us. Mayuresh, I was talking about factors that can generate a lot of buying. Globally things are not that great. Domestically also things are not picking up. Maybe incremental money may take some time to come in, and that's why one should not be in a hurry to be overweight on Indian equities.
No, clearly, I think if one really needs a longish view on the markets, you will see revival happening in earnings over the next few quarters with the fall in commodity prices that you're witnessing. Clearly, I think that will have an implied effect on how margins and the bottom line for a lot of corporates will pan out. But having said that, probably I think it's more to do as a function on when the earnings revival will happen. So clearly, I think if you're talking about the first half, you're conveniently saying that it's going to be Q1, Q2 of the next fiscal that the earnings will show some amount of respite. And FY17 numbers will obviously look good because the base effect will be very, very low. So clearly, I think international factors will keep the market in check. And domestically, I think these factors will keep us in check as well. So clearly, I think there would be a few stocks within sectors that can outperform the markets. And clearly, that is what we're probably looking at this point of time, where the earnings can be pretty reasonable and where the valuations are not looking that expensive.
Right. How would you look at a name like Tata Motors back to the 360, 366 levels? You think that that's a space where it would generate buying, or it makes sense to go back overweight on these names? Because so far the numbers have looked good. But now as we are getting Q3 estimates from a lot of brokerages, they are expecting a weak quarter from Tata Motors.
Well, yes, again, I think the weak numbers probably are expected from Tata Motors to come through. It's going to be more of the China effect, where the contribution has now come down significantly to 14-15%. However, I think a lot of estimates on the street are anywhere between 12 to 14% in terms of JLR margins. Having said that, probably the volumes ex-China have held up exceptionally well, North America being in case in point, where the volumes have been exceptionally good. Even in the domestic scene, though the MHCV segment contributes, or the Indian operations contribute a very small fiscal portion of their overall top line and bottom line, I think that is showing signs of revival as well. So I think I'll wait for declines onto the counter, as I said earlier, I think. But again, I think one really needs to look at numbers, and numbers are expected to be weak. So the counter may correct from the current levels, and that will pose a good opportunity for long-term investors.
Right. As far as Cadila Healthcare is concerned, that's a name which is up 2.5% right now. Do you think that's a name one should look at? Decent correction coming in. We got the details of warning letter coming in. 12 to 18 months is the expected time of resolution. You think most of the bad now seems to be factored into the price?
Well, clearly, I think the correction that we've seen probably factors in the kind of news flow that has come in terms of the ban and the content letters of the import alert. But clearly, I think if you're looking at an EPS estimate for Cadila, our own expectations in the next 2 years were a 17-18% growth. In fact, a 20% growth, close to that 17.2 odd rupees. Now, clearly, with the ban coming through, you're going to see an impact happening not just of filing of products from the existing facilities, but the shifting of product to the other sites is going to entail a lot of transfer cost. Add to that, you're probably looking at resolutions anywhere between 12 to 18 months. So the numbers are going to be very, very weak over the next few quarters. Once the numbers start flowing in, my concern is that the markets might not take those numbers in the right stride. So clearly, I think we've got a neutral view on the stock. Let the stock stabilize, I think. Let the numbers start appearing a little bit better once Q3, Q4 results are out. So clearly, I think neutral on Cadila at this point of time. We might prefer Sun Pharma at this point of time.
Right. Gas companies have done particularly well, so I'm talking about names like IGL, Petronet, LNG. You think these names had been completely ignored, and one should look at these names? Even these names, IGL right now is at the day's high, Petronet is almost close to the day's high. You think these names would continue to do well?
So individually, I think, Pankaj, if you're looking at the kind of price movement that the stocks have exhibited, they've shown a huge amount of rise. And clearly, I think if you talk on IGL particularly, I think you're talking probably of CNG volumes going up over the next few quarters. The PNG volumes is something that has held up with industrial offtake being exceptionally good. The two acquisitions that they've done, Maharashtra National Gas and Central UP Gas, I think those acquisitions are going to hold up the CNG business pretty well for them. So just a reflection on how volumes pick up for them and how the gross margins basically stand out. So I think the estimates were running in the tune of around 9.5, 10 rupees per SCM. But again, I think you might see expansion probably happening if the volume uptick, specifically on the CNG part, is quite good. And again, I think the domestic gas added to that, the LNG prices have probably come down drastically over the last few quarters. So that is going to affect them in a big manner as far as their spreads are concerned. So clearly, I think a lot has got factored into the price, not ruling out another 10-15% move on a stock like IGL. And even for the case of Petronet, I think if you're looking at the utilization levels at the Dahej at 120%, the capacity expansion is going pretty well out there. But again, I think the Mangalore extension and the capacity utilization, which is very, very dismal there, is going to keep a check in terms of how the gross block is probably getting utilized in the case of Petronet. So in the sense itself, I think a lot has got gestated to the price. There might be a 10-12% move on both the stocks. But clearly, I think wait for declines before you make a fresh investment in both these counters.
Right. As far as, names like Reliance Industries are concerned, 7-8 years, nothing has happened. Nobody has gone majorly overweight on this name. But recently, it has started to move. Is that a name you would look at?
I've been positive on Reliance for a length of time. And again, I think I've been reiterating this point time and again. it's not a quarter-on-quarter thing that you should be probably looking at Reliance. The kind of core capex they've done and the non-core capex, if I could take telecom in that, I think a lot got gestated to the price because of the expansion that they were probably doing, and the cash flows were not coming, because of which the ROEs were subdued below 12.5-13%. But clearly, I think the capex program is almost at the end of its cycle, both on the core side as well as the non-core side, and then the return ratios are going to see a significant improvement over the next couple of years. Having said that, I think within the core business itself, the petcoke gasification, the off-gas cracker, the PTA plant that is expected to come through, I think all of that is going to abet their petchem margins in a big way. And even on the refining side, because of the kind of complexity that Reliance's plants have got, I think the GRM should hold up pretty well as well. So in that sense itself, I think the refining and petchem businesses should hold up for Reliance. And once telecom starts contributing from FY17, I think the return ratios should start appearing far more better. So in that sense, I think you've got to take a couple of years time horizon. It has underperformed over the past few years, but I think times have changed for Reliance. I think once numbers start flowing in, I think it will be very, very evident on the way the stock price moves. So I'm remaining a very, very optimistic and maintaining a positive view on the stock.
Do you think 2016 could be a make or break year? If the telecom venture works out well, then it could probably go back to the previous highs?
So clearly, I think even at this point of time, if we ignore telecom revenues, even for 2016, because largely it will start coming in 2017, the core business itself is expected to do well. So I think with the commissioning, as I was mentioning earlier, comes through over the next few quarters, I think the numbers will appear far better. I think more efficiencies will start coming through. And yes, there might be probable concerns on how the shale business is moving, but again, the retail business has held up pretty well for Reliance. So if I talk about their core businesses, refining and petchem, they're expected to do well. And again, I think the performance will be very evident in the way they post their numbers. So clearly, I think not taking telecom numbers, even in FY16, I think over the next 2 years, Reliance should perform well, not just in terms of how earnings pan out, but also in terms of how their efficiencies are laid out in terms of new plants coming through, and that will be very, very evident in the way the stock might move.
Right. As far as the ADAG pack is concerned, do you like that space?
Now again, I think huge movement seen. I think Reliance Infra, case in point, I think tremendous movement in terms of price. And again, I think the entire story on how the deleveraging component is moving for the entire pack. Having said that, probably I think Reliance Com, or the telecom part of Reliance, I think there is still some amount of sluggishness as far as their core activity is concerned. I think telecom as a sector as a whole, there would be some amount of weak links, both in terms of how their capex plans go out, how the opex plan goes out. And clearly, I think huge investments are required to be done in A, strengthening their network, and in B, and B, probably strengthening their own internal systems. Having said that, probably I think the core data points do suggest that realization is expected to remain weak, with Reliance Jio probably coming through. The data revenue component, which is an integral and an important component for a lot of telecom operators, I think that would see some amount of pressure. So though the industry is going through consolidation, I think you will see some amount of compression happening, both in terms of how the voice revenues are going and how data revenues might go forward. So again, maintaining a largish neutral stance probably on the telecom sector at this point of time, including Reliance Communications.
Right, Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. Mayuresh, bullish on select names that we spoke about, but saying that one has to have a cautious approach when you invest into the market.